How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was recorded on November 3rd, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. And so let's start by examining gold. Alright, so let's take a look at gold here. What do we see? So gold has been sitting at these highs for quite some time. And I want you to take notice of what we're seeing here now. Okay? Take a look at those positions. Over the last few days, we see them decreasing their long positions. Okay? From 340 down to 326, now down to 321. This would suggest profit taking on long positions, which is nothing surprising to us. We've been talking about this since this period over here. Okay, so it's been many weeks of sideways ranging, but over the last few days, last few weeks, we are starting to see a little bit more momentum start to build with the profit taking. It could continue, or it could start to trigger a move to the downside. We're still waiting and watching to see what is going to take place. But one thing I will point out is, take a look at the coloration here. Take a look at the coloration here. Okay, bullish to neutral. Next will likely be bearish, but we have to wait and see if that's going to be the case. Next we have oil, and oil, we can see that they took profits on long positions, reducing them from 659 down to 639, and then take a look over the last 3 weeks, increase in short. Now we do know that this data comes as price was dropping, so an increase in shorts would be expected. But this is the last 3 weeks. That's this week, and this week, increasing their short positions. So is that going to fuel a larger move to the downside? It's possible. It's tough to say, because if you look at the monthly chart, we haven't really hit that monthly area of supply yet. This area has been hit, and that's why we are getting that reaction to the downside. But to say that this is going to be enough to fuel a move all the way down here is difficult at this time. Okay, we do see in the future a rally that is going to be taking place. It could be from lower, it could be from exactly where price is right now. It's very difficult to say, so we have to wait and see. US dollar, what are they doing with the US dollar? Alright, bearish engulf. What are they doing with their positions? Not much, but we can see that they reduce shorts. Interesting, reducing shorts as price was rallying. Why would they be reducing shorts? Not too sure. I have some ideas why. Look at this here. Bullish, bearish. What's happening now? What would this lead you to suspect if you had to follow the pattern here? If you had to follow the pattern of going from bullish to bearish to neutral, you could easily suspect that bullish is going to be next. If you take a look at the coloration here, they were bullish, they went neutral into bearish territory, back into neutral territory. Next could definitely be bullish. So we're watching and waiting to see how this is going to play out. Now we look at the Aussie US dollar, and price has been ranging for some time now, stuck within this range here. But what's interesting to note is this date here. Okay, and look at the positions held here, 59,000, and look at the positions held here for shorts, 43,000. What has happened since that? 43 to 57 for the short side, and longs decreased from 59 to 56. So what we can conclude is that all throughout this area here, institutions have been more focused on reducing or increasing their short exposure and reducing their longs. Alright? This would give us the suspicion that price is going to drop. Now we have a lot of evidence that we've gathered throughout all the markets to lead us to suggest that there's going to be a drop, and this is just another one, another piece of the puzzle to add. Okay, again, let's take a look here. Extremely bearish contract expirations came. They got rid of all their short positions. Then we saw the rally up in price, which we had forecasted, and that brought in some bullishness. And now we have been consolidating or ranging on the weekly chart, and as they've been ranging, they have been focused on adding to their short positions and reducing their longs. So it's pretty clear that there's a very strong case for a move lower here. Bottom line is we have some obstacles that need to be removed before we can know with any certainty that that is going to take place, but all the evidence is suggesting that a drop is coming towards us. Next we have the USDCAD. And so if we take a look at the CAD, we see that they closed some longs, but the bigger move was closing of shorts. So there seems to be a theme here with the US pairs where there is a reduction in short exposure. And that's as price is at these lows, right? We used to be up here. Now we're down here. And they're closing shorts. So if price was to continue going lower from this level, we wouldn't think that they would be closing off shorts. So I want you to take a look here too. Bullish, bullish. In between, neutral, neutral. Are the institutions aggressive right now with this pair? No. If they're not aggressive, it's not a good time to trade. And we've known that. You know, we've detailed in at the school, within the forum, within the classroom sessions, about the price action here, within this ranging over here, what it looked like on the daily chart and what it was telling us. And we've been dead on accurate with these moves that have been taking place. So it's very interesting to always look at the data and combine it with the charts, and the two will usually, if you know what to look for, will support each other. Okay, so not a good time to trade this pair. Now we look at the US Swiss franc and we see that longs closed off, and again a reduction of short positions as price was rallying. Okay, so this pretty much feeds into what we've been talking about when we look at the dollar and the USDCAD, that there could definitely be a move lower from here, but the evidence is suggesting that we're going to see price reverse and head higher. Now we go over to the euro. This one's showing us a lot, so let me point it out to you. You remember when positions were at all-time highs here with the longs, right? Okay. Well, they've since been closing those positions, profit taking, which is exactly what we've been talking about. Profit taking. This is not, it's not a big surprise to us. I mean, when we take a look at what was taking place back here in 2018, it was the same scenario. Record high number of long positions. Then they have to close them because they can't keep adding when they don't have the positions to open. They've reached their record amount. Now they got to take profits. I mean, once you've established a position, the point is to take profits on those positions so you can make money. So profit taking fueled this move here, and now we're at record numbers again. What is likely going to take place is a drop. Okay, they're definitely not focused on shorting right now, although this past week we see an increase in shorts. So this could start the momentum to the downside. Okay. Let's take a look now at the pound. This one is a bit different because if you take a look at the positions, neutral, neutral, coloration of cells neutral, they're not focused on this pair right now. Okay, the institutions are not focused on this pair, which means we should not be trading this pair, because if you get in long, where's price going to go? Price is only going to go up if the institutions are buying. If the banks aren't getting involved in the currency, it's not going to move, because your average Joe is not going to move the market. It's the banks. If the banks aren't investing, then it's not going to move. Okay, so this is not one that we want to get involved with. Then we have the US dollar, Japanese yen, slowly made its way lower as we've been expecting. The coloration of the cells here have been red for quite some time. It's been bearish. That means they are invested in this one. And if they're invested, it's going to move. Take a look here. Increase in shorts from 46 to 51, and then we got the move. No surprise there. All right. Kiwi. What do we see here? Closure of longs, closure of shorts, not much going on. Look at the coloration since June. Neutral. Okay, they're not really focused on this pair at this time. Yeah, we take a look here. They were bearish. They've been bullish, still bullish, but when you examine the coloration of the cells, it's more blue than it is green, which means it's not a good time to be involved in this pair as well. Alright, so we just sit in the sidelines and wait, but there are some good moves taking place, and we are ready, locked and loaded to take advantage. I've already gotten to some positions on my personal account with the euro, and so I'm well situated for the moves that we have, that we are expecting. So we'll see how that plays out. It's a waiting game, but eventually it will set up, and when it does, there'll be plenty of opportunities to get into these markets. Alright, ladies and gents, that's your CFTC report for November 3rd, 2020's data. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks. Have yourself a good weekend. Take care.